Hey everyone, Tina Pries here with Pries Capital Real Estate. Welcome back to another edition of our Chart of the Week series, your weekly snapshot into what's really happening in the Myrtle Beach housing market. At Pries Capital, we track every move in local real estate home prices, inventory trends, buyer activity, and contract data, so you can make informed decisions based on live, forward-looking data. Let's dive into this week's insights. This week brought headlines about a government restart and a lot of new ideas out of DC, but here in Myrtle Beach, the real story is much more practical. Mortgage rates barely moved, local housing trends are grinding sideways, and the homes that are winning are the ones that are efficient, resilient, and priced with discipline. Let's break down what the data is really telling us. Let's start with the macro piece that touches every transaction: mortgage rates. Despite the drama in Washington around the government restart and policy chatter, mortgage rates this week are roughly unchanged. We're still living in a high-rate regime. Think upper sixes to low sevens rather than the 3% money everyone remembers. That stability is helpful in one sense. Buyers and sellers can actually plan. But it also means we're not getting that big affordability boost that would suddenly pull a wave of buyers off the sidelines. For Myrtle Beach, the impact is very specific. Move-up buyers are still rate-locked. They don't want to trade a 3% or 4% note for something almost double. First-time buyers and investors are laser-focused on payment, not just price. Anytime rates even flirt lower, we see a quick but brief pop in applications and pendings, and then it fades if rates pop back up. So the playbook right now is not wait for 4% rates again. The playbook is assume higher for longer, and structure your deals, price, credits, and buy-downs around today's cost of money. Now let's zoom into the weekly housing trends for Myrtle Beach single-family previously owned homes over the last 3 months. The story is a slow, grinding shift toward a more balanced but still choppy market. Active inventory is running higher than last year, so buyers have more choice than they did in 2024, even if we're still below 2019 levels. Pending sales are softer on a year-over-year basis, which tells us demand is cautious, not aggressive. The pipeline into winter is thinner than we'd like. Days on market have stretched out into the 100-plus day range on average, which means the frenzy is gone. Buyers can slow down, compare, and negotiate. And roughly half of active listings have taken at least one price cut, which is one of the clearest signals that sellers are having to meet the market, not the other way around. Put that together, and you've got a market where good product correctly priced still moves, but anything that's dated, overpriced, or poorly presented just sits and eventually has to chase buyers with cuts or concessions. Finally, let's talk about what's actually selling at a premium in 2025. The hottest home trends we're tracking, especially here along the Grand Strand, are efficient, resilient, and self-sustaining features. That means energy efficiency, better windows, newer HVAC, insulation, tankless or high-efficiency water heaters, resilience on impact-rated windows and doors, elevated construction, metal or architectural roofs, whole house dehumidification, which is huge in a coastal, humid environment like ours, and self-sustaining solar, backup power, EV-ready garages, smart home systems that actually lower a monthly bill. In Myrtle Beach, this translates very clearly. A Carolina Forest or Market Common home with modern systems, good envelope, and low anticipated maintenance is going to outperform a cosmetically updated but mechanically tired property. Same on the condo side. Buyers are increasingly looking past the granite and straight into HOA health, insurance exposure, and building systems. In a high-rate, high-insurance world, anything that lowers ongoing monthly cost or risk wins. Let me boil all of this down into real-world moves. For buyers, you finally have time and options. Use them. Shop aggressively. Focus on homes that already had a price cut, and structure offers around payment. Ask for seller-paid points, credits, and repairs instead of just chasing a lower sticker. For sellers, this is not 2021. Strategy wins. That means right price, right condition, right incentives. If the market is giving you slow traffic and no offers after 2 weeks, the data is talking. Don't ignore it. For my investors, we're in a stock picker's market for real estate. Not every zip code, HOA, or product type is equal. Underwrite conservatively, lean into efficient, resilient assets, and assume today's rate environment sticks around longer than you'd like. The theme this week: the market isn't crashing, but it is sorting. The prepared players, on both sides of the table, come out ahead. If you want to see how these trends apply to your neighborhood or your portfolio, that's what we do every day at Pries Capital Real Estate. Reach out to us directly, or sign up for a free Pries Capital Real Estate research account at priescapitalrealestate.com to get weekly, hyperlocal data for any zip code in the country. I'm Tina Pries. Thanks for watching this week's Chart of the Week, and I'll see you in the next update.